Good afternoon. September 16th. It is Monday. It is FOMC week. We're in the middle of rollover on CME stuff, and we have OPEX. Expiration is Wednesday as well. So it's a tough week to trade generally. All those by themselves make it pretty tough, but we expected it. That's kind of what we thought was going to happen today. It's what played out. So we have, this is December. My intention was to stay on September today because I was pretty confident we weren't going to have the volume. But my platform switched me over, so I ended up being on September. See if we can pull these over. So we had more volume on September Friday, but see today on September we had 365K traded, but on December's contract we had 552. So more than 50% of the volume RTH is now on the December contract. So everybody should be shifting to that, whether you want to trade it or not. That's another story. But let's look at the newsletter today, the trading plan. So we talked about, last week we saw some strength coming into RTY and YM, the Dow, probably on the increased odds that we were going to get, or we are going to get a 50%, 50 basis point cut on Wednesday as opposed to a 25 basis point cut. So I think we saw a little bit of rotation more into the smaller cap stuff that was going on again in the pre-market overnight session. We had Apple that was hit pretty hard. They were down 2.5 or 2.75%, something like that before the open on their iPhone 16 sales being down. Another pop shot at Trump. Other than that, there wasn't much going on in the overnight session. So we were looking at, the fact that we have FOMC and everything, that it could be a challenging week to trade. That was our main concern coming into today. Scenario one was a look above and fail, balance out. And so we were looking for volume signs of continuation because we've been on an uptrend. So we want the market to prove that it can't continue higher. So once we get above the previous high, which I put this red box in here to give an idea, and these, because this contract is rolled over, actually, let me pull this back up. Put us back on September. So it matches my levels. Okay, so if we break above and fail, the first target was 56.30, which was right in here in this area. And then second target was 56.21. So where they stepped in on Friday. It was also basically our overnight low. That was our main target for this scenario, right in here in this level, this 21 overnight low and this pullback low right here. Didn't have any problems hitting that target, but it never gave the look above. It couldn't even get above the overnight high, or it couldn't really get above the overnight high to get to the previous high. So it never gave me the opportunity to get in on that trade. And then the extreme target was 56.07. We didn't quite get there today. No, we may not get the look above and fail for this scenario to play out. Given the upcoming catalyst and market structure, this is the lowest risk entry for the scenario. So what I was talking about there is, just because a trade plays out, if it doesn't play out where I'm expecting it to play out, then I'm not interested in taking the trade. Doesn't mean I won't all the time, but the highest probability setup for me would be to get above this previous high day so I can watch the volume up there, see if we have volume coming in, if they're absorbing that volume. And that gives me a place where I know I need to be out of the trade if it doesn't work. It gives me a pretty good entry, most distance to target, and that never happened today. We didn't get above the previous high day. We put in a weak high at the very end of the session. So by pretty much the start of B period, I think, I turned my focus to other things. I write a lot of programs and code up some of the tools for the steam room, and I had phone calls today, so it's perfect for me to do that. And that way I don't have the pressure of trying to get a trade in every day. I don't care if I trade this week at all. It doesn't matter. I'd rather get those high probabilities set up. So Scenario 2 never came into play, so it was all scenario 1 today. We didn't have much catalyst today. We don't have much tomorrow either. It's going to be Wednesday for FOMC that everybody's really looking at. Other than that, we had confirmation of an uptrend on our composite model, which takes several different factors into play. And we've been in an uptrend on our daily for market structure, still flat on the weekly, and that hasn't changed today either, and on the monthly. And then other than that, the top bets, like Jay says here, Wall Street Jesus, keep in mind most of this buying likely replaces expiring September exposure, but there's not much else to call out. So this is, in my opinion, a really good thing for me to see this, even though I'm not trading these names today. I know whenever he's pointing out this stuff, that's the best of the best today. So there just wasn't a whole lot of really super flow. Still, I think IBKR ended up positive on the day. So it wasn't bad. It just wasn't the best either. So IBKR, up 0.5%. What else we got here? What's that? Berkshire. I'm not even gonna look at that. Tech, which is a mining play, I think. Metals commodity play, seeing some rotation in the November calls. Again, he's not super excited about that one, but that's what we got. Up 1.5% on the day. So I mean, it still was something to trade if there wasn't anything else. Now, like I was talking about in the newsletter, liquidity is still low. It hasn't improved. The pace of the roll, we were only 30% on Friday, and let's had this up earlier. We're about 45% of the way through today. And then I don't think they've updated their volumes, but we just looked at those anyway on the platform. Yeah, I haven't updated that yet either, so that's pretty much all we got. Going into tomorrow, we're in balance. So, like I said, I highlighted this chart right here. This is our balance area. We like to see if we break above and fail, and we like to trade to the other side of that. And, really probably extend this down a little bit now. Be looking down into this area. So inside of this area, we want to be real cautious trading. Plus we have, tomorrow we're going to have FOMC the next day, and that can lead to tough trading. Rollover makes it tough. OPEX makes it tough. So this might be a good week to focus on other things, get other things accomplished, get your charts cleaned up, get your trading logs done, all that kind of fun stuff. But we'll see what happens. We'll see where we're looking to open up tomorrow. See if we have any catalyst overnight. There's still lots of stuff going on in the Middle East and Russia and everything else. So hope everyone had a good day trading, and we'll see y'all in the morning.